So we are live and recording. Good morning, everybody. Alex here, hosting today from a very grey, rainy pool in Dorset. Welcome those of you who are joining us from elsewhere in the country, which I can see we've got people. We've got Amanda is in sunny Warwick. We've got Michelle saying hi. We've got Socky joining us from a wet Cardiff. I'm from Cardiff, so I know it's always wet in Cardiff, Socky. We should know that by now. And Nick Cole, Chief Commercial Officer at Float, is joining us from Edinburgh, where I believe the sun is kind of shining as well.
Yeah, I mean, it's not raining. It's not. I wouldn't go that far, Alex, but yeah, it's okay.
Awesome. Well, look, Nick is going to be taking this webinar with me. He's a Chief Commercial Officer at Float. He spent 20 years working in digital agencies, and he's got a wealth of experience, as you'd expect, in running successful businesses through the good times and the bad. And we've certainly experienced both sides of the coin this year. No matter how your business has done, I think we've all experienced ups and downs, highs and lows. We are talking something vitally important. We're talking why cash flow insight is crucial for business bounce back. We've got a load of people piling in here on Crowdcast this morning. Hi, Anthony, joining us from Brighton now as well. And we are streaming live on Twitter, Facebook, and YouTube as well. So if you are on those platforms and you want to come and join us and ask some questions, I will monitor those platforms as well throughout the webinar for questions for Nick. But if you want to come and join us, as always, it's festivalofenterprise.co.uk to register for this and any other webinars. Obviously, those of you who've registered to join us here have read what this is going to be about today, but just to reframe it for you, there is a lot of talk right now about how to keep your business afloat. We've covered, many of those during the last 100 days here. But what we wanted was to help plan for what happens when things start to go back to a version of normality. We're kind of getting there, and I know Wales and Scotland have got their own versions of that as well with regards to their responses. Like Socky there, I'm from Cardiff. My family is still in Cardiff, and they've, I think, been the slowest to open things up. I think as of yesterday, correct me if I'm not wrong, Socky, my mother was telling me last night that Wales are now opening up travel and also businesses as well. And then we've seen other countries, Nick and I just talking about Australia, seen other countries like Australia, Spain even start shutting down, restricting parts of the country when there is these spikes. So, these are unknown times. Today, Nick is going to talk us through why forecasting your cash is going to be pivotal for bounce back success. Also going to be covering how to save time using a cash flow app that links directly with your accounting software. How to easily create scenarios to map out what the new future will look like. And I think that's going to be particularly useful for a lot of us today. And Nick's going to kind of split this up into a couple of different sections. Do you want to tell us what you're going to start off with first, Nick, and then I'll hand over control for you?
Yeah, sure. I think I guess, like, if you can see this lead slide, what I'm going to do first is I'm going to dig into that why. I think it's easy for us as someone that is involved in the cash flow space and has a cash flow app that we think is really helpful to almost go straight to the how. And go straight to our app. And actually, I think it's really important for businesses to understand that why, to really get their head around why and what that means. Like, what does cash flow forecasting mean? What does cash flow insight actually mean for them and their business? And join those dots a little bit. And then what I'm going to do is I'm going to go give a little bit of overview of more of the how. Using Float as a specific example, and all being well with my internet connection, then go in and give a bit of a live demo of Float and take questions on that if anyone's got any.
Great. And as always, those of you who are regulars here, since we started doing this back in mid-March, post up your questions if you can into the chat function. If not, if you just want to position them to me and I will ask Nick, that is cool. That's the Ask a Question tab that you should be able to see at the bottom of the dashboard as well. So you can use either of those options. and use this as an opportunity to connect. Morning, Beatrice from Wrexham. So drop in. I dropped in my LinkedIn profile at the top of the page. Normally we'd be at a live event here where we'd be interacting as humans and seeing each other and getting a reaction. So do use this as an opportunity. Drop in if you'd like to connect with like-minded entrepreneurs and business owners on here. I'm sure Nick's got a slide as well with his contact details. So, drop in your contact details here. Let us know, have you got your own business? Or are you looking to start your own business at the moment? And any questions or commentary even, with what Nick's going to be telling us about. So just drop those into the chat function there. Look, enough of me. I'm going to hand you over to Nick to talk about why cash flow insight is crucial for business bounce back.
Thanks, Alex. Hi, everyone. Thanks for joining this morning. So as I said, what I'm going to do is I'm going to just dig a little bit into essentially what is cash flow, and give a little bit of an oversight. And I think a positive cash flow basically at a top level means businesses have got more cash coming into the bank than they're spending at a very, very basic level. And a negative cash flow means the opposite of that there's more cash going out than coming in, which may seem really self-explanatory and like running a business 101. But that's not necessarily the case. And I think it's not necessarily the case that businesses have got a really decent and good handle on that. So if cash flow is really the flow of money in and out of your business, how many businesses think they know what cash flow is and why it's important? It'd be interesting to understand. Maybe people could put in the questions like how many people are already cash flow forecasting, whether they're using Excel or a tool like Float or the back of a fag packet, or whatever that is. It'd be interesting to understand like how many people are already doing this. Also, potentially, how many people are receiving, help and advice from potentially their accountant or bookkeeper on this subject, or whether their accountant or bookkeeper has been really proactive with this. I think that would be interesting to see. I
posted up a poll actually, Nick, where people can, literally put in yes or no. Yeah.
So that we're in unprecedented times. We're hopefully coming out of the end of that. There's been some pretty scary statistics around during COVID. I think what it's done is it's really focused the minds. And I think one of the good things, hopefully, that is coming out of this is that it's potentially focusing people's minds about understanding those cash reserves, understanding what their business needs to give a buffer. Looking at the ONS data that came out during COVID, 5% of UK small to medium enterprises had no cash reserves whatsoever. More than 20% of the businesses surveyed didn't know. They didn't know what level of cash reserve they had, and there was actually less than 25% of businesses had more than 6 months worth of cash. And when you're thinking about the fact that we've been locked down, many businesses have been entirely closed. Most businesses have been impacted negatively in some way. Those are pretty frightening numbers when you think about the length of time that we've had to deal with. And I'll go into sort of what that might look like moving forward in a little bit. So, why is cash flow insight important? It's important for those reasons. Like really understanding what your cash flow is and means to your business has arguably never been more important than now. We've certainly been really, really busy. During COVID, we provided an extended free trial access to Float because we were very, very conscious about businesses having a handle on that cash to help them through these tough times. Another pretty scary statistic, and we often discuss the credibility of this number at Float, but there's plenty of sort of evidence for this online that 82% of businesses that go out of business do so because of cash flow difficulties in some shape or form, and that is in normal economic times. Never mind in the times that we currently find ourselves in. So, not having a handle on your cash flow is a perennial problem. It is not just a crisis problem, and I do want to stress that. I think it's definitely sharpened focus during the crisis that we're still in and coming out of. But it is a problem for businesses all the time, and it should be really something that you think about in that capacity. It's not just for crisis. Like, cash flow is not just for crisis. It should be for always. I think one of the challenges is that, a lot of business owners, it's quite out of their comfort zone. Getting into these sort of financial areas is often not what they're there for. It's not what they understand necessarily. And COVID is, while it's definitely sharpened the focus of business owners, and it has caused serious challenges in this areas, I think it's actually really easy to assume that business owners naturally join the dots between their challenges and being proactive with their cash flow, and having a forecast and budgeting and understanding, well, look, this is what I'm expecting to come in and this is what I'm expecting to come out, rather than that situation being quite hand to mouth. I think from our point of view, we have to be careful not to assume that everyone arriving at Float or everyone coming to Float on a trial basis or engaging with us via one of these webinars potentially really gets it. The business owners, don't always use the term like cash flow forecast when you're asking them about their concerns. Often you'll hear things like, well, I'm worried that I won't be able to pay my employees every month, or our sales are great, but it takes us a long time to get paid. We have a lot of debtors, and they'll ask whether they can afford to do things like, well, I'm really stretched. I feel like I need to hire someone, but I'm really not sure whether I can afford that. And actually all of that I've just talked about is cash flow forecasting. So definitely we need to do a better collective job of understanding why this is really important before we get to getting into the details of a how. Thanks very much for posting the comments. I'm sort of trying to keep one eye on those as we go, and those numbers, which is interesting. Yeah, so 71% of cash flow forecasting already so far, which is excellent. We're going to get into that time saving and how Float can potentially help you do that better. But that's a really great starting point, for sure. Yeah, so we go back to the flow of money in and out of the business, and as many businesses are really currently finding, it doesn't take that many weeks or months of not having enough cash before business might find itself in real difficulties or even on the verge of going out of business. It's all of the usuals. It's obviously an unprecedented situation, and we do have help in place from government. We do have help in place from banks, etc., in terms of payment holidays and mortgage holidays, etc., etc. But that is not going to be forever. While it's great having a cash flow forecast, you can't pay bills with theoretical money. You need to understand what those incomings and outgoings are, and you really, really ideally need to do that with some level of certainty. I've run a business before, which I'll get to, and certainly, I want to know, or as close as I possibly can know for sure, rather than thinking or rather than assuming that everything's okay. So there is that trust and that certainty piece that comes with your financial planning that's super important. There are some pretty scary numbers being bandied around at the moment, and you see this is UK GDP. You can see the US, you can see the UK, and you can see the Eurozone, and it is frightening. And the things that really that we need to pay attention to is you may have weathered the storm during the last sort of 100+ days of lockdown, and be hopeful of re-establishing the business, of bouncing that business back. And I think many businesses, will do that. However, it's very important that you don't think that is going to be immediate, because I think you everywhere that you read and just sort of being sensible about it will lead you to the fact that it's not just going to snap straight back to normal. So many businesses, if they had cash reserves, those cash reserves are depleted. They might be gone now. So any other bump in the road is going to be really problematic. Many businesses are already, have taken up government schemes like furlough, and many businesses will still have staff on furlough. Certainly, one of my friends runs a tea business here in Edinburgh, and she has different tracks to her business. So she has a tea room, she has a retail store, and then she has an online store where she sells directly to the public, but also very, very heavily to the hospitality trade. So the different aspects of her business have been hit in really different ways. I know for a fact that she's not going to open her retail store yet, because she doesn't want to take staff off furlough when the footfall is not there. And I went into the centre of Edinburgh on Saturday and it was still very, very quiet. So understanding when the right time to think about winding furlough down is. Obviously, the furlough scheme is going to be winding itself down in terms of contributions. So being able to understand and model that, being able to understand and paint as certain a picture as possible of what your recovery might look like. That's obviously industry specific, but modeling the capacity that you've got versus your staffing levels versus your expected bounce back and the rate of that bounce back, maybe factoring in consumer habit changes, because the period of time that we've been in lockdown is definitely enough time for people's purchasing habits to change. If you've applied for a CBILS or a bounce back loan from the government, understanding when those loan repayments are going to kick in and what that looks like for your business down the line. So really being able to model these out as accurately as possible is going to be really crucial to that bounce back being successful. So my favorite description of cash flow forecasting comes from one of our accounting partners. So she's a super accountant called Sharon Brown from a company called Magic Beans based in Belfast. And the analogy that I really like about how she uses float specifically, but cash flow forecasting as a discipline, if you like, is that she likens your accounting platform to like the financial engine of your business. So it's under the bonnet, it's purring away ideally. And if you're a business owner or a car owner, ideally you don't want to be under that bonnet a lot, and you want a professional to be under there making sure that is in good condition, and that's the analogy between the mechanic and the accountant. But if you're running that business, absolutely what you need is you need to be able to see clearly down the road. So you need headlights to be able to show you where you're going, to provide that clear view. You need lights on the dashboard, if you like, that are gonna light up if anything potentially is going to go wrong with that engine. So that dashboard in your car warns you of any engine problems. And the way that she positions float and generally cash flow forecasting is exactly that. It's that ability to see clearly down the road in a trustworthy way of what your numbers, have done, but most importantly, particularly now, are going to do. And I think this is the really key area and difference between a lot of, your accounting packages and accounting generally, is that it's historic, it's backward looking largely, which can help inform the future, but for the most part isn't telling you exactly what is going to happen. And having run a business before, that really is the most important thing. So if you think about that clear view down the road, with cash flow forecasting, with float potentially in place, actually, imagine now that you're driving that car and you put a pair of really dark sunglasses on. That analogy there is essentially, for me, the equivalent of running your business without a visibility of your future cash flow. You may be seeing shadows and you can maybe react a little bit, but actually, ultimately, you're in danger of crashing that car. So now more than ever, you really need to know what your cash flow looks like so you can be proactive for all of those reasons that I've just talked about. And again, just really reiterating that it's not just for crisis. So building really good habit and baking this into the processes of your business is really, really important. A lot of customers will think, I'm in trouble, I need something to help me get out of trouble. And once I've sort of found that and I'm out of trouble, then I don't need this anymore. I would really argue that that is not a sensible approach. A little bit of context, I guess. It's like you're probably sitting here thinking, like, what the hell do I know? I've mentioned that I've run businesses before, and I think the interesting sort of specific example that I can bring to the table is I joined the agency that I was at before I decided to join Float. They were a family-owned business. They'd been running since 1983. They've been relatively successful, actually, as a small Edinburgh business. They'd rebranded Radisson Blue. They'd rebranded TGI Fridays in the US, so really big ticket items. When I arrived, they'd built up to nearly 40 staff. They'd opened an office in the US. They had lots of cash in the bank. They were potentially, well, definitely coasting along. But I think they were in a position where the owners didn't really understand the cash flow of the business. They didn't really understand the ins and outs. They'd had a purple patch. They'd won all this work. When I joined in 2016, and really my remit was to try and spread the load. They had two clients. I had quite a few discussions with the owners about, yeah, we're fine, we're growing, we're hiring. And actually, when you really looked back at that, that was a really dangerous situation for the business. And actually, I was managing partner of that business, and when I decided to leave to join Float in the autumn of 2018, I'd done 20 odd years in the agency world, and that is a pretty stressful space. 8 months after I left, actually, the business was being wound up because they'd just really hadn't got a handle on. We tried really to get a handle on what the ins and outs of that business were. So, and that wasn't even within the current challenging times. So, there are plenty of businesses that on the surface are successful, on the surface of things, think and look like they are doing well, but actually it doesn't take much. If you can't really see down the road, it doesn't take much. Losing a client was the catalyst for this, for TV going where it went. So I would definitely, there's a word of warning there from personal experience. I've hopefully set the scene a little bit about the why and why we think cash flow forecasting generally is important. Great that over 70% of you already get that. So how can Float specifically help your business bounce back? In lots of ways. I'm not sure of the 71% how many people are using Float or something else, but potentially if your cash flow forecast looks like this, then I would definitely argue that there is a better way. There is a better way to see things, to look at things, that will save you time, that will give you more sort of live insight. It's a good starting point, right? So if you are doing it and you are seeing this, then great. But what you could be seeing is something like this, and this is Float. So I'm going to dig into this a little bit. There's many advantages of Float. It's the idea of Float is that it's live. that it's actionable, that it's immediate because it's directly connected with your cloud accounting platform, that it's visual, that you don't need to be an accountant or a bookkeeper necessarily to see value. You don't need to be a spreadsheet wizard. You can actually see at a glance, but also you can dig into the depths of each transaction because we're pulling all of that accounting data in. My favorite comment and review of Float from the past period was this, and I really like the fact that this customer of Float was referring to Float as a guide. I think very much that backs up that view down the road analogy that I just talked about. So we're proud of these sorts of reviews, and we've made redoubled our efforts really during COVID to help small businesses as much as we possibly can. So why is Float good? Why Float will help? As I've said, Float is designed to be easy to set up. It's designed to be simple to use. We've been going a while, so we're continually improving Float. We're continually hearing feedback and listening to our customers to provide a better experience. We've definitely put a lot of effort into sort of taking and demystifying cash flow forecasting, I guess, and making it visual for people that aren't necessarily financial wizards that are running lots of different types of business. So one of the things that we'd framed within this webinar was around those scenarios, and certainly going back to my agency days, I must have thought what if about 10 times a day. So what if we win that client? What if we lose that client? What if we hire a new person? What if? So the way that our scenarios work is that they enable you to model those what ifs. And this has never been more valuable than now. If you think about all of the things that I spoke about before, so around furlough, around loans, around footfall, around modeling those things out, you understand what you can and can't do and what you shouldn't do. The functionality and Float around what ifs is incredibly important. So within Float, you can get a view of your invoices and bills, so you can really understand what's coming in, what's going out, what's overdue, what is going to be paid when. You can change the dates on that, which I'll show you. So there's a cash flow visibility, and cash management within Float is also a big deal, which again is sort of up the food chain, if you like, from a spreadsheet. Budgets are really central to Float as well, so making sure that you are budgeting and you have a handle on, well, this is what I'm expecting, so this is what I'm expecting to go out, and this is what I'm expecting to come in. And there is a functionality within Float that enables you to balance those things and understand, well, this is how I thought I would do, and this is how I'm actually doing, and be able to change things around and model things within the software. Float is really granular, so we actually allow you to forecast up to 3 years into the future, and I think probably right now 3 years into the future might seem like an eternity, but really where the strength of Float is that short to medium term. So we allow you to drill down into even a daily view, a weekly view, a monthly view of your cash flow. You can drill into each transaction if you want. So you can see, at a very granular level how you are doing. So I've motored through that because my intention was to actually log in and show you a live demo of Float, and this is where the internet connection caveating needs to come in. Just to be clear. When we're talking about Float connecting with your accounting packages, we currently integrate with 3 cloud accounting packages, so QuickBooks Online, Xero, and Free Agent. So right now you need to be using one of these platforms to be able to get the benefit from Float, because the way that Float works is that we connect those platforms and then we pull all of that data securely in from your accounting platform, and that sets up a live link. So as you're updating things in your accounting platform, it's updating things in Float. So I just wanted to make that clear. So what I'll do is I'll dot in to Float. So hopefully you can see this. This is the entry screen of Float. So this is our overview screen of Float. So once you've been and you've connected your accounting package, Float will guide you through a setup process. So we'll onboard you. We've got a lot of educational material. We've got a lot of in-app help. We also have human beings available in-app as well to help you do this. So we will guide you through that budget setting process. So you might already have a cash flow forecast in a spreadsheet. We have a spreadsheet input mode here, so you can actually import your budgets, etc., from a spreadsheet if you've already got them. So the idea of this screen is that it gives you an at-a-glance view of how you're doing, and it's surfacing some key things that we feel are really important. So this particular demo is connected with a zero account. So what we're seeing at the top here is it's telling you your total balance in zero. It's telling you how many bank accounts you've got connected. So we pull in the data via zero, for instance, from multiple bank accounts if you want, and within Float you can toggle those on and off if you don't want to see a particular bank account or credit card included. You can see down the left-hand side that we have 3 different sort of alert areas. So we're telling you how many items and the value of those items that you have to reconcile. This is really, really important because actually, if you think about this, then what this is really saying is that because Float is fed from zero, you've got 23 items within zero that are unreconciled worth £4,883. So your cash flow forecast in Float is not going to be representative of the actual picture once you reconcile those items. So we definitely find that using Float breeds really good habit so that you can really stay on top of your numbers. So look, that's come in, I need to reconcile it because I want an accurate picture. And I think, again, right now, when things are moving potentially so fast, I would definitely encourage businesses to get into that habit of really being on it. Or, if you are using, 50% apparently of the audience are getting help from their accountant, then actually, if your accountant isn't doing that, then they really should be. So don't be afraid to turn around and say, look, can I need this to be reconciled frequently. You can see that we're also looking at invoice dates and bills. So Float will tell you which bills and invoices are overdue and past that expected payment date and how much they're worth. And again, we can dig in and it will take you to those screens here. The real sort of, core of Float is your cash flow forecast. So as you can see, this is a day-by-day picture of your cash flow forecast. So we can see what today is, and then you can see day by day, when this is based on what your budgets are versus what is being fed in from your accounting platform, what your cash position looks like. Again, you can see how you're progressing against budget and your net cash movements here in your overview screen. So if we dig into our cash flow tab, so far so good with the live demo. What this is basically an extended picture of what you've just seen with the balance, what needs to be reconciled. Up here, this is a threshold. So you can see the 1st of August 2020. What this is telling us and what you can do is you can actually go into Float and set a threshold where Float will tell you when you are due to fall below a certain amount of cash. So in this instance, we've got sort of £5,000 overdraft basically set up, but you could set that to be whatever you want, and Float will understand when exactly you are due to go below that amount of money. you can see, again, this is an extended version of the graph. And as we go down into the big table, again, this is really sort of the engine, I guess, of Float. And what you're seeing here is all of your budgets. So you can see what you're expecting cash in is via, in this instance, loan and sales. And then you can see relative to your chart of accounts that have been pulled in from Xero, what your total cash out looks like. So across all of the different categories, so advertising and marketing, entertainment, rent, repairs and maintenance, wages, VAT, etc. You can see, and any of these cells you can dig into. So if we wanted to dig into July's sales, we can just click on that cell, and what this shows us is every single transaction. We can click into any transaction and we can see that this is what our budgets are. So we can delete, we can ignore. So we've got the capability here to be able to say, well, actually, client one, £2,000 expected sale on the 17th of July. Actually, I'm not going to get that this month, so I'm going to ignore that for this month. And I can save that. And what that's going to do is that will have a live impact on your cash flow. So in this instance, what you're saying is that you're not expecting to get £2,000 in July that you were expecting to get. So that will worsen your cash flow view. Rena, you're asking a question around how much float is to use. I'll get to that at the end. I'll be able to answer that question at the end and point you in the right direction. So again, all of this is, you can dig into each and every one of these cells. You've got real flexibility to be able to model those budgets. And what this enables you to do is to get very, very granular. So we go to the daily breakdown screen in Float. You can see on a day-by-day basis what your cash position looks like and what is coming in and what is going out. And again, you can dig in to each of these cells. You can see exactly what it is that you're expecting to get, when it's due, where it's come from. All of this data is accurate because it's been pulled directly in and live in from your accounting platform. So that's one of the beauties of that sync, is that you know that it's true because your single point of accounting truth is feeding Float. You can set the date ranges on here. So if I just wanted to see July, for instance, I would be able to go and say, well, just show me what the rest of July looks like cash-wise. You can then, as I've said, look at the invoices due and bills to pay. So these are pretty much essentially mirror images of one another, one coming in and one going out. So you can see from an invoices due point of view that actually we've got £6,330 and a total of 12 outstanding invoices due. You can see as we dig down into the table that actually who the offenders are potentially. You'll know exactly what is due. You'll know exactly what the original due date was, what the expected payment date is, because actually in Xero, for instance, those are two different dates. And what you can do in Float is you can go in and say, well, look, I've had a conversation with Port and Phillip Freight. I know that these invoices were due on this date. I've had a conversation with them. What they've said is they're going to be able to pay me in 30 days. And I can go and I can make that change to those, and that will live impact your cash flow forecast. So it'll move those expected payments in terms of your cash flow forecast back 30 days. Again, as you can do exactly the same in bills to pay. So you can understand, well, actually, there's often a lack of correlation between what I'm getting paid over here and what I'm paying over here. So the beauty, again, of Float is that you can really, really quickly and in a time-saving way say, well, I'm not going to get paid for this, so therefore I'm going to push paying this out, because if I pay this and I don't receive this, then I'm going to be it's going to really exacerbate my cash flow problem. So again, you can see and you can negotiate and control your credit in this way. One of the really big things that I've covered, and I'll just quickly cover this, is scenarios. So we talked about those what ifs. We talked about being able to model, well, look, this is my baseline expectation, but what if we cut costs. And what Float enables you to do, and a bit like I'm a bit old, so sort of Blue Peter style, I've made one earlier. We've got a cost-cutting scenario that I've already worked on. So what does cutting costs look like in terms of my cash flow? So what does that do? So you can basically see, and what this does is this takes that baseline and it layers on theoretical what-if scenarios where you can control at a granular level. Well, I'm expecting if I cut costs here, if I move out of my premises, or if I go on a payment holiday, or if I potentially make someone redundant, then what does that look like? And if you see within our sales and with our outgoings, Float will show you, and you probably can't see, but Float will show you and shade relative to the color of that cell. So you can see that actually historically I had some contractors that I was paying £5,000 to. So what I've done in this theoretical scenario is say, well, actually, what if we don't continue to use those contractors and pay those contractors? That's £5,000. And what that actually does is that improves the cash flow situation of my business like this. And you can layer on multiple scenarios here, so you can have a best case, a worst case scenario for your business. And what you can then do is, with those different scenarios, you can go into our Insights tab and you can layer on the different scenarios, and you can see, well, actually, scenario A versus scenario B versus scenario B, and set the time frames of that too. So it was a whistle. That is a whistle-stop tour. Excuse how fast I'm talking. What I'm going to do is I'm just going to jump back into the demo. If anyone's got any questions, please ask. Rena, you asked about the pricing of Float. All of the details are on our website at floatapp.com. We sell Float. There are different versions of Float and different pricing plans of Float. We sell directly to small businesses, so you can get your own license of Float. You can also potentially, if your accountant or your bookkeeper is a Float partner, then potentially they can get you access to Float as well.
Thanks, Nick. Got another couple of questions here. So Hillary says, we are using Sage. Does that preclude us using Float?
At the moment, it does, I'm afraid. So yeah, as I said, we currently integrate with QuickBooks Online, Xero and Free Agent at the moment, but we're always looking. We're always looking to understand, whether if there are lots of Sage customers potentially that want to take advantage of Float, then it's something that we're always looking at.
Yeah, that makes sense. To give you an update on the polls that we've got running, we've got 80% of people are cash flow forecasting.
That's good.
50% are getting help from their accountants. 37.5% aren't getting any help at all.
So I think what we've definitely found during the crisis is that lots of our accounting partners and bookkeeping partners have really stepped up to the plate. We've found that a lot of accountants are really understanding that this is crucial for businesses. And I think one of the challenges of cash flow forecasting is that it's complex, is that it's time consuming, particularly if you're doing it in a spreadsheet, and particularly if you're not an accountant yourself, and therefore that's going to be eating time that potentially you could and should be spending on the business. On helping, really planning and strategizing about how the business can bounce back. If you've got your head in a spreadsheet for 20 hours a month, then that's potentially 3 odd days of time that you could be spending thinking about the business. So definitely making sure that you've got a really good proactive accountant on board, or if not, that you are thinking about, well, look, how much is my time worth? And how much of that time can pay £49 a month is our sort of base price of float. Like what value is that to my business? What's my hourly rate? If that's gonna pull my time down from 20 hours to 2 hours, then that's providing really good value, particularly if float basically gives you a better picture and certainly a lot more flexibility than using something like Excel.
Yeah, and a question probably related to that from Sarah, who says, how much time would you expect me to realistically spend working with Float as a bare minimum? I guess that's really, just ballpark. Yeah,
it's a really good question, Sarah, and it's not easy to answer.
Yeah, of course,
because it really depends on the complexity of your business. What we definitely find is that Float will guide you through that budget setting process. Depending on the level of granularity that you want to get into there, that could take you half an hour. It could take you a couple of hours if you really want to be detailed with that budget setting. But thereafter, if you're on it in terms of making sure that you're reconciling your accounting platform really well, and then Float is fed. So Float is fed every 24 hours. But there's also a manual button. So if you know that you've done something in your accounting package, you can just go boop, and within 30 seconds, Float will have the latest data in it to enable you to either at a glance say, right, actually good, everything looks really good, or there's a worry in 4 days' time, what's that, and drill in. So for sure, there's definitely really serious time savings to be made versus Excel. I remember having a conversation with an accountant who was sort of looking and being like, well, actually, how much does Float cost? Unfortunately, that accountant had told me that that week they'd spent about 10 hours setting a cash flow forecast up for a client in Excel. So when it came to me sort of then justifying the cost of Float, it was like, well, what's your hourly rate? It was 100 odd quid an hour. Then that's £1,000 basically worth of your time you've spent doing one cash flow forecast for one client when it automates a lot of that process.
Yeah, I've got Ben's just posted up a question, and I've got exactly the same question from Sarah here, who asks a similar question in regards to how far in advance should you forecast? Would you advise forecasting?
As I said, Float enables you to forecast 3 years into the future. I think right now you would probably have to be a magician to understand that is going to be an accurate picture 3 years down the line. I would definitely encourage that a minimum should be 3 months, because you need time to react. Ideally, right now, especially if you've taken any loans, any of the government loans out, any either CBILS or BBILS loans out, then ideally I would encourage you to be forecasting to that point when those loan repayments are going to start, potentially impacting the business.
Yeah, appreciate that. And Anthony says, how flexible is Float with working out different scenarios, what if analysis with projections?
I mean, it's really flexible, Anthony. You can amend every single granular element of your budget within a scenario. So if you want to create a scenario that is pretty simple, i.e., what if I stop in X contractor, which is the example that I showed you, then that is super quick to do. But if you want to go in and really model out, well, what does my business look like with 60% of its income, with 40% of its income, with people still on furlough until October, or removing people from furlough, or pulling staff out of the business, or raising prices, or you can do all of that within Float. So you can really, really model out those scenarios to very detailed levels.
Thanks. And Beatrice, how much cash reserves do you advise? And I guess is it a minimum 3 months answer as well? Would you say?
Yeah, I mean, ideally, I think it's difficult, and as some of the statistics that I showed in here, I think that's really difficult. I think some businesses don't have a lot of margin in their business. It's difficult for them to build up like serious cash reserves. If you can get to 3 months, then I would definitely suggest 3 months as a sort of minimum point. We don't know what is going to continue to happen this year. As you said, Alex, Melbourne has already gone into another 6-week lockdown period.
Yeah.
So businesses, I don't want to be like doom mongering. It's not really why I'm here, but businesses there that thought they were going to come out of things and potentially that have scenario planned for their business bouncing back in have now got another 6 weeks of lockdown to deal with and modeling what that looks like. So I definitely think at least 3 months. And sort of making a comment about 3 years. So I think that if you can get 3-6 months, even potentially a year to when those loans are going to kick in, I think that's sensible right now.
And like you say, it's just so difficult, isn't it? Because every time the government announces a change in policy or new openings for different types of businesses, you're just moving the goalpost again, isn't it? And I think
one of the good things about Float is that those scenarios react to your base.
Right.
So that the base budget that you set with your expected incomings and outgoings, those scenarios react relative to that and are layered on top of that base. So every time that there is a change, I guess, in reality within your business, within your accounting package that is feeding into Float, then that scenario will adjust itself relative to that. And you'd asked, the question had been asked about how much time to put in up front. When I would definitely encourage like a bit of time being put in up front, because the more accurate you get that budget picture and that picture initially, then the better, the ongoing picture is going to be.
Yeah. And I guess this probably comes from somebody who hasn't got any help at the moment, because they said any preferred software provider, and I know you said you work with Xero, Free Agents, etc.
Yeah. I think it depends on the nature of your business. Free Agent is really more for sort of micro businesses, for sole traders. Xero is a really excellent piece of software. So they do a good job. Our integration with Xero is really strong. So certainly, our demo that I've just given was on a Xero account. So QuickBooks Online or Xero are both good pieces of software. Both of them will offer you the opportunity to free trial as well, so you can go and have a look and see which one fits best with the nature of your business.
Yeah, I've interviewed both founders of Free Agent and Xero, so Gary and Ed. So I wouldn't like to say either way. Preference wise, they're both great guys. Actually,
I think it's definitely take a look at both. They're both really good. They're both really growing. I think what's more important than which one is making sure that you choose one.
Yeah.
So if your account, if your accounting package is not online, is not in the cloud, that's really important, because actually, while that in itself is better because it's quicker and more live, what that does is it opens up a world of apps like Float that can really save you time, that can really enable you to see that picture down the road better. And if your accounting package isn't in the cloud, then like we, for instance, don't integrate with non-cloud products.
Yeah, brilliant. Well, listen, let's check the polls. I'll let Nick give some final words. I'm just going to check the polls first of all for last week. Yeah, so 80%'s gone up now to 80% of people are cash flow forecasting. 50% got the accountant helping, and 37.5% haven't got any help. So big opportunity there, clearly.
I think that 80% is a really good number, and one of the things that I do think we all probably have a responsibility. If there's 80% of people in this webinar that get it,
Yeah.
And understand why it's important. That if you're part of a business community, and this is not a sales pitch, like if you're part of a business community, or if you know other business owners that aren't forecasting in any capacity, then I would definitely be encouraging them to do so. Whether they use Float or not, actually, it's most important that that educational message about why it's really important is spread, because 80% is not indicative of how many small businesses in the UK have a handle on this. It's a lot lower than that.
I bet. Well, listen, thank you all very much indeed for your questions. Just coming up to 11 o'clock here. Have another webinar for those of you who want to stay on at 12 o'clock. And that is talking about the entrepreneur's journey from freelance to freedom. So join me. I'm going to be hosting that one at 12 o'clock today. But just further information, that the place to go to, Nick?
Yeah, so our website, I'm conscious I haven't put my email address on there, but it's really simple. It's Nick, Nick, at floatapp.com.
I'm going to put that in there now for you, floatapp.com. So anybody coming in, watching the replay, the last thing you're going to see in the chat box, boom, there you go, is Nick's email. And I'll also post up the website as well. And as I say, everybody, replay will be available literally 10 seconds after I press the end broadcast button here. Likewise, we have been streaming live as well, Facebook, Twitter, and YouTube. So we'll be available there as well. So yeah, thank you very much indeed. Thank you for your time. Nick, any last words? We've got your floatapp.com.
No, I mean, I think I've hopefully covered everything. Hopefully, answered people's questions. I would definitely just, encourage people to spread the word. It's if you know business owners that are really struggling, and it's really stressful right now. It's really, really stressful. It's not a magic bullet, but it can definitely help.
Yeah, absolutely. Thanks, Socky. Thanks, Ben. Thanks, Beatrice. Thank you for your kind words. Thank you, everybody. And enjoy the rest of your day, enjoy the rest of your week, and I hope this brings continued prosperity for everybody over the next 6 months or so. So thank you all once again. Thanks, Nick. Appreciate your time.
Cheers, guys. Good luck.